whether it be small businesses or individuals, we will all need the help. So this is how the local banks have decided that they will play their part. Particularly the four main banks, Capitec not necessarily naming many of its parts. But the payment holidays coming through, particularly for around 3 months, qualifying customers, students and small businesses could get a payment holiday then from them. Some businesses, or some individuals, if you earn less than 7,500, it is just absolutely automatic that they won't be taking certain payments from you, while everybody else may need to just make a call then, of course, to the bank itself. That officially started today. Preferential interest rates, the likes of FNB in particular, saying that it would be available for 3 months at some of their banks and saying that you will get a preferential interest rate, of course, upon application. No fees on any of the relief funds that you then ask for as well. So certainly if you ask for that, you would expect that banks may be able to charge you interest and the like, but they're saying we will not do that. Bridging facilities, individualized for some customers, in order to give you what is tailor-made for you, what you can afford. And these banks trying to make a way. Deferred payments as well, in part or in whole. So in part, meaning that only a portion of that debt, or perhaps the whole thing, for existing loans then, of course. So the banks perhaps making some effort, a lot of this coming about specifically after the South African Reserve Bank released more liquidity into the market by saying the banks don't necessarily have to hold a certain amount of money and they can reduce that, which means that they willingly could lend out a whole lot more money to consumers. How they make that back in the future is, of course, going to be a question that you and I will relay a little bit later on. So let's continue then and see how things are faring. This is the responses then by the particular central banks across the world. If we start then locally, the South African Reserve Bank has managed to do three major things. The first one was just around the 19th of March. They decided to cut interest rates by 100 basis points, probably the biggest cut that they've made at least since before the global financial crisis of 2008-2009. They then later on announced that they would be buying bonds on the secondary market here in South Africa. To what extent, nobody really knows, and even they said they wouldn't know at that time as to how much that would be. And they said that they would reduce liquidity holdings by banks, which is what allowed the banks then to be able to give more money out to people and perhaps let go with regards to how much was necessary and needed in terms of payments. The European Central Bank's response to COVID-19, well, they put out a 750 billion euro pandemic emergency purchase program. Basically, quantitative easing, buying back some of those bonds as well, buying back assets that they deem necessary and to plunge liquidity back into the market to help the market continue to have a whole lot more money. That purchase program is made up not just of private, but also of public sector securities. The US Fed in the United States, then $700 billion at the very least of quantitative easing. And this is just the Federal Reserve. We're not talking about the more than $2 trillion economic plan that government had set out. They've also decided to lower interest rates, having set it around 1.25, and we'll give you an image of that a little bit later, to between 0 and 0.25, nearly flat at that level. Let's continue then to see how things fare out, particularly out in Asia. The Bank of Japan's response, well, they said, well, we'll offer an unspecified ample liquidity for the repo market. They weren't too sure on how much to give because they fear that their economy is already in recession, much the same as the rest of the world anyway, so they couldn't necessarily make too many moves when it comes to their central bank. They've also increased the purchases of ETFs, J-rates, and even loans. J-rates, of course, those being housing purchases there too. So what did the People's Bank of China do? Of course, this was where the first case was. This is how you throw a bazooka. You increase bank liquidity via a repo operation. So throw more money into the system so that more people are still able to make purchases. Banks aren't necessarily suffering. You continue to add that you reduce reserves required by banks to 1 percentage point. So much like they did here in South Africa, you do that too. Temporary deferment of debt repayments. So, like we have payment holidays locally, we certainly then saw that the People's Bank of China decided that they would defer the payments for a certain period of time. They then reduced the medium-term lending facility. They have a whole host of different lending facilities that are given out to people. And this one, which is the medium term, still within a year, was reduced by 10 basis points. They also then reduced the 1-year and 5-year loan prime rates by at least 50 basis points each. That was the bazooka thrown by a whole host of these economies. Here we go, though. This is the rate of the interest rates, the central banks, and this is what they decided to do in the interim period as they decided to make a breakthrough to COVID-19. From 10.75%, Turkey decided to cut interest rates by 100 basis points and put that at 9.75. But look at how high those interest rates still remain. South Africa, on this chart, still having the second highest set of interest rates. Our repo rate, sitting at 5.25% now, is 100 basis points lower than before we started the month of March. So that certainly tells you that drastic measures were brought in drastic times. And look at that then. China still also decreasing. As I said then a little bit earlier, their medium-term loan, being the primary one, was decreased by 10 basis points, and that's how you got it at 4.05%. Malaysia there going down to 2.5. Canada, a 100 basis point cut there. Australia, a 50 basis point cut. The United States now cutting it. Of course, that was the upper limit of both those rates, cutting it there by 1.5%. New Zealand, 75 basis points. The UK there, half a basis point too, or 50 basis points, should I say. So that is the response. That's how big a response people have had to make then to ensure that COVID-19 does not necessarily plague the rest of the world and their country. The big question now is, are these measures enough though? Is it going to be enough to curb not just the spread, but certainly the economic fallout coming through from COVID-19? Let's chat to Christopher Gilmour, independent analyst then, who does join us. A late evening as well, Chris. Thank you so much for the time. Are those measures enough? I mean, there's a whole range of them there.
Anna, I think we have to have a little bit of historical perspective on this, not that far back, going back to the global financial crisis of 2008, 2009. Where the central banks probably didn't act quick enough or decisively enough.
Yeah.
Ben Bernanke, who was the Federal Reserve chairman at the time, was a great observer of the Great Depression of the 1920s and 30s, and he eventually managed to get the whole thing moving. So what I'm saying now is I think the banks have acted very decisively and very quickly. So to your question, will it be enough? My concern now is that if you look at the rates of unemployment that are coming, especially in the States, we had James Bullard of the U.S. Fed 2 weeks ago saying that U.S. unemployment could reach 30%. And all of us kind of poo-pooed that, saying that's not possible. Well, you know, it is quite possible because when we saw those unemployment figures last week, of the new unemployment applications at 3.2 million from a couple of 100,000, that just shows you what can happen. And we get another indication tomorrow when the Fed releases the figures as well, or should I say the U.S. Statistical Office.
Yeah.
So it's a difficult question to answer. We'll only know in a few weeks' time. But I think, and I've been very consistent on this, and you mentioned that $2 trillion package that the U.S. authorities have also put into place. They realize that all around the world, every government realizes that you have this very, very delicate balance. What do? Do you kill the economy?
Yeah.
Or do you try and save lives? And at this point in time, we're trying to make out like they're not mutually exclusive. But unfortunately, as more and more time goes on, it will be seen to be a mutually exclusive exercise.
Yeah.
And this is, I mean, no government in the world wants to preside over the deaths of perhaps millions of people. If you look at previous pandemics, the 1968 through 72 one, the flu, the Hong Kong flu, as it was called, over 2 or 3 million people died. 1957, between 2 and 4 million people died. And then, of course, you had the huge one back in 1918, where something like 50 million. Nobody wants to preside over that type of thing. So there are major political considerations here.
Yeah. Are we seeing, though, that they are making, as you said, the concerted effort, the speedy effort to try and get this done? And, like the president of Ghana said, though, that we are able to revive an economy. Yes, it may take long. We are able to revive and put back to life an economy, but we don't know how to revive or bring back to life human beings. So very critical at this point then to perhaps put the lives as the first element here. Do you think that that is what the central banks, the governments, they're all trying to do at the very least, even if they do have to come to their senses a little bit late, i.e. Trump?
Oh, no, absolutely. I think everyone is largely singing from the same song sheet, albeit in different ways. They're expressing it differently. So, yes, I think the answer is everyone wants to try and get their own health authorities to have enough money to be able to confront this wretched virus. And, all around the world, you're seeing the situation where many health authorities, some of them like Italy, they're on their knees and they've got a very, very good health service, but they've just been overwhelmed by the extent of it. So they're going to have to go for major credit lines. Now, the Italian banking system is in deep, deep trouble, and that just compounds the problem. So the EU, and you made mention of that earlier on, is obviously that it has that uppermost in its mind. So yes, I think that the bankers are well aware of the seriousness of this whole thing and are quite prepared to throw money at it. But we have to bear in mind there isn't an endless supply of money.
Yeah.
There isn't a magic money tree. So at some point in time, 3 months down the track, 6 months down the track, who knows? The problem we have now is that we're not going to see a vaccine until maybe June or July of next year at the very earliest.
Sure.
We might, if we're lucky, get an antiviral drug in the meantime that would be successful. But, so I think what we're going to have to see is some kind of compromise, some kind of situation where you have lockdowns and then they're taken off, a degree of normality creeping back in to get some sort of work back into the workplace, people going back to work to an extent. Then you have lockdowns of varying severity. Yeah. I think that's probably the way it's going to pan out for the remainder of the year.
Very quickly, Chris, do you expect more measures to be put in place in South Africa particularly? Or have we done enough?
No, I think we'll probably see another rate cut. Look, I think a lot of people misinterpreted the actions of the Reserve Bank over the weekend.
Yeah.
The Reserve Bank denied that this was quantitative easing, and they were quite right to do so, because quantitative easing only really comes into play when you've exhausted the ability to reduce interest rates to near to zero, and we're far from that. So I think we'll probably see another bank rate cut of 100 basis points or thereabouts in the next few days or weeks.
Sure. Unprecedented completely. Chris Gilmour, appreciate the time. Independent analyst there, joining us live there as well as we get to the hard numbers, right, as we try to unpack more of that coronavirus story economically as well. Now, as a quick update, before we get the latest numbers, or rather, as we got the latest numbers earlier today, this is where we stand, South Africa, and I thought I'd give you a quick update. Let's get all the numbers for you. We officially then also had a little bit earlier on our official numbers, but this is what we sort of look like then on the global front, right? We have 887,000 total cases, the likes of Italy, US, and now Spain joining them in getting the 100,000 club. Certainly very, very interesting on those numbers. 185,541 total recoveries. That's 21.4% when it comes to the total average figure there. Total deaths at 44,216 on that front. So as you can tell, the epicenters certainly shifting away from China and Asia in particular, and now hitting the rest of the world quite hard. Let's move on to the local numbers though. Yesterday, our official numbers stood at 1,380 people, and hopefully we can get that figures and those graphs then up for you then to have contracted the virus in South Africa. That's 1,380. That's the number that we then put up by the minister yesterday. This comes after more than 39,500, as you said then as well, on the 1st of April. So those are indeed the numbers. And hopefully, South Africa, we can begin to take this seriously. Thank you so much for joining us here then as well. And we'll continue to unpack this a whole lot more. From me, that's where the buck stops.